Why would you want to know how to trade divergence? Well, because divergence oftentimes is the first indication that a market is likely to reverse. And I don't know if you've seen reversal trades before, but they tend to be very good trading opportunities if they work out. And this divergence gives us an extra layer of confirmation on reversal trades. It can help to weed out a lot of the false signals and put you in the best possible opportunity to make profits from reversals. So what I'm going to do in today's video is teach you all about divergence. We'll start off with what divergence is. That way, if you're brand new, we can get you up to speed. In the second part of the video, we'll talk about how we can spot divergence using price action and indicators. And in the third part of the video, the most important step of all is I will show you how you can actually use divergence in your trading to create better trading opportunities. So if that sounds interesting to you, make sure you go ahead and click that subscribe button. We come out with videos like this each and every week. It's down below the video to the right-hand side, and click the notification bell. Click the like button for me while the intro and disclaimer roll. Make sure to give us a follow over on Instagram at The Trading Channel, and I will see you after the intro and disclaimer roll. What's up, traders? Welcome back. And right before we get started, if you want early access to videos like this, we actually released this video that you're watching right now on Instagram 2 days ago. So give us a follow at The Trading Channel on Instagram if you want to get early access to videos. Right now, let's jump into what is divergence. Well, reading straight from Investopedia, they define divergence as when the price of an asset is moving in the opposite direction of a technical indicator such as an oscillator, or it's moving contrary to other data. So we're going to go onto a chart and I'm going to show you in a picture what that actually means. I'm actually going to put that, make it visual for you to make it easier to understand. And the use of divergence says that it warns that the current price and trend may be weakening, and in some cases may lead to price changing direction. So that's what I mean when I say it's a reversal indication. Right now, we're going to look at the chart. Right now, we're on the Aussie Yen 15-minute chart, and we're going to take a look at what it means for an indicator or oscillator to be diverging from price, to be going contrary to the way price is. If you look on the screen with me right now, you can see that on the Aussie Yen 15-minute chart, we have a high here. We then have a new higher high. On the oscillator, on this case, we're using the RSI indicator. This is the indicator we'll use for the entirety of this video, and it's my favorite indicator to use for divergence. On the RSI indicator, you can see that we have a lower high. So with this being the case, this is what we call divergence, is the indicator moving contrary or opposite to the way price itself is. The candlesticks, price action itself is making new higher highs here, but our indicator is making lower highs. With that being the case, we have divergence. So now you know what divergence is. Let's move on to the second part, which is how can we spot divergence on a currency pair? And in this case, it's going to make for a very good example here on the Aussie Yen. We're going to use this chart one more time. The first thing I'll say is the when. When do I start looking for possible divergence? Well, divergence is a reversal indication. So with that being the case, with it being a reversal indication, I need to make sure that the market's trending up or down before I use it. Reversal does not work well in consolidation. You want to make sure the market can actually reverse. So for that reason, make sure it's a trending market. The way I do that is by making sure the RSI is either overbought or oversold before I look for divergence. So for instance, if we had this same thing happening, but it was happening down here before we had overbought markets, it was happening in between the 70 and the 30 line on my RSI indicator, I would not use that as RSI divergence. Let's say the market was making new highs like it is right here, and we had a high followed by a higher high, and we had this divergence. If this divergence didn't happen after the market went overbought, I don't count it. So that's the first step in how we spot it. Is rule number one, in order to spot divergence, we need the market to be coming out of an overbought situation or an oversold situation. We'll look at an example of oversold in just a second, but that's the first step. The second step is, let me actually use this replay tool and show you something really interesting that a lot of traders make this mistake. If I see this market right here and I say, okay, well, we have a high right here, and this high went overbought right here. So now I know what I'm looking for, right? I'm waiting on a new higher high, and I want this RSI to be a lower high. With that being the case, I want to see this divergence. So I'll put a horizontal line at our high in price, and a horizontal line at our high on the RSI indicator. Now let's move the market forward until we get a new high. Boom, right there. We have a new higher high. And if we look at the RSI is lower than the previous high, right? So in this case, do we have RSI divergence? Well, if you said yes, you made a very similar mistake to what I see a lot of traders doing. This is not a swing high. In order to classify this as a new high, we need to wait until it turns into a swing high, and I have rules for that. But let me tell you the reason first. What if all we saw was green candles, and green candles kept pushing this market up, and it ended up not being RSI divergence? If that was the case, would you want to trade it like RSI divergence? Of course not. So what do we do in this case? Well, in order to look for this second high, right now, where price is, I wouldn't even be looking at my RSI indicator. Not at all. I want to see this high as a swing high, and in order to do that, for my rules, I need this swing high to be followed by 2 red candles. If we have 2 candles pulling back after a high, I consider that a swing high, and that's the only time I start looking for divergence on my indicator. So let's move the market forward and see if you can spot when I would be looking for possible divergence down on that RSI indicator. Would I be looking now? Remember, we can have just tons of green candles, and if we do, and this market does not diverge at that point, what if the RSI comes up to here after 2 more green candles? Then it would have been a stupid trade to try to trade divergence when the market hadn't shown you that it was going to make a new swing high at all. So what we have to look for and wait on is that 2 candle retracement to show me this is a new swing high. There's one. We have 1 candle. Let's see what happens next. Right here. At this point is the only time. Remember, I wasn't even looking at the RSI. At this point, I can now bring up my indicator and say, okay, we have a new high in price. We have a lower high, new higher high, lower high on my RSI indicator. For that reason, I now know that I have RSI divergence or divergence in general. In this case, we're using the RSI. So this is what I look for when looking for divergence. Rule number 1, I want to make sure the RSI is overbought before I start looking for divergence to the selling direction. Oversold if we're going the opposite direction, pretty obvious. But after rule number 1's in place, I don't want to just trade based on 1 candlestick making a higher high. I want to make sure that's a swing high. In order to do that is me looking for, or the way I identify that is with this 2 candle pullback. So at this point, I can see that we have divergence. And now that you know how to spot divergence in a market, what I'm going to do is teach you how we actually use this information to get into better trading opportunities. How does this help our trading? We're going to dive into that right now. So in order to show you how to use divergence in your trading, we're actually going to take a look at this live trade we are still currently in from a couple of days ago on the Euro New Zealand 15-minute chart. Before we get into that, I've been trading now for, this year is my 10th year. That's hard to believe. Wow, time flies. This is my 10th year trading, and this is my 5th year being a trading coach. Throughout that time, I've realized that traders normally fall under one of 2 categories. Those 2 categories are discretionary traders and systems-based traders. Let me briefly explain the difference between those, because what I'm going to do is show you how you can use this as a discretionary trader and how you can use it as a systems-based trader. Discretionary trader would be someone that does not have set in stone rules they follow all the time. They may have something like a point system they use. For instance, markets at resistance, that gives me 1 point. Markets below or above a moving average, that gives me 1 point. Overbought RSI is a point. Certain price action patterns may be a point. And maybe they say I need 5 points in order to place a trade. That would be an example of a discretionary trader. A systems-based trader would be someone that has set in stone rules for everything. Price must be at resistance, must have RSI divergence, and must give me a candlestick pattern of some kind in order for me to enter the market. Think of a systems-based trader as someone that looks at a checklist. Say they have like 6 different things on this checklist, and they don't even place a trade until all 6 of those rules are checked off. That's the only time they allow themselves into the market. So we're going to talk about how you can incorporate divergence into both of those trading styles. Right now, the first thing we're going to do is take a look at how you can incorporate this into a discretionary trading style. So let's do that right now on the Euro New Zealand. On the Euro New Zealand, I'm actually going to use my replay tool here and show you exactly what I was looking at. So we had a market that had just bottomed out down here and has started pushing higher. So as it starts to push higher, let's see what happens. We push up, we're not overbought yet, and right in here, I'll bring my indicator a little bit higher, make price action easier to see as well. Right in here, we go overbought. So I know I'm already looking at an overbought market. That intrigues me. I'm waiting for some type of divergence. At this point, we get a little bit of RSI divergence. That's awesome. We have our high, our new higher high. We have a lower high on our indicator. We have RSI divergence, but for me, my entry criteria has not been met. My entry criteria is something I'm going to discuss with you whenever we actually enter the trade. So let's keep going. Let's keep moving price. So, and remember, this is the discretionary way of trading. As the market pushes up, we get a new higher high yet again. And let's see, do we get divergence? Remember, we can't see this as RSI divergence right now. This is a really good example of what I was talking about earlier, because we have a high here and the RSI is still pushing up. It doesn't matter that we have a new higher high and RSI divergence until we get that swing high, which is the 2 candle pullback we're looking for. So let's keep looking for that 2 candle pullback before we start looking at whether or not this is RSI divergence. There's our 2 candle pullback. So right now what I want to do is zoom in on the RSI. I have my 2 candle pullback. I know I have a higher high in price, right? 100%, here's a high, here's a higher high. We know that for sure. Well, we have a high here on the RSI. Is this high lower than that high? Well, there's a very easy way for us to figure that out, and that is by looking right over here whenever we hover over the candle we're looking at. So right here, you can see RSI was 72.99. If I go over to our next high, 72.84, is that less? The answer, of course, is yes. So we, in fact, have RSI divergence right here. You can even see it whenever I put my horizontal line on the screen. We have space right here, meaning we have RSI divergence. So for me, I knew I was already primed for a reversal trade here on this chart. As a discretionary type trade, I'm waiting on a few different factors. Let's see what I was waiting on. The market pushes down, gave me a big move down. That's one of my factors. I need to see a big move down from RSI divergence. That gives me a little more confirmation. After that big move down, I was waiting on a little period of consolidation that I could use for a possible breakout situation. And once I got that little bit of consolidation, right here is where I decided I was going to place an entry, because for my discretionary style that I'm using on this specific trade, I don't always trade discretionary. I'm more of a systems-based trader myself. But for that, I'm looking for RSI divergence, lower highs on the RSI, higher highs on price. I'm looking for a big move down followed by a potential breakout trade. That's exactly what I got right here. And for my discretionary trade, that's all I need in order to enter. So I did. I entered the trade with a stop loss above our previous high. So I'll go ahead and put a position tool. Entry. My stop was right above this previous high you see over here. And targets, I'm managing this position. I don't have an absolute set place. There's a place I'm looking at out on a higher time frame. Not important right now. This is just one of the ways you can use this. I'm trying to keep this video as short as possible. A lot of my videos have been over 20 minutes here lately. So I'm going to try to do you guys a favor and keep this one pretty short. But as you can see, the market's pushed down now. And if I just go ahead and get there, this is about where we're at now. So the way I used this in a discretionary style was by putting a lot of things together. I got a point for it having RSI divergence. There was a point for our 4-hour chart being against the 50 EMA. That's something that gave me a point for a discretionary type trade. If we look out here on our 4-hour chart, at the same moment we were getting divergence on a 15-minute chart, the 4-hour chart was pushing off of our 4-hour chart, of our 50 EMA, excuse me, very hard with a lot of different wicks. So that combined to give me a great day trading opportunity that I could score on a point system, and I got more than 5 points with it. We have wicks coming off the 50, that's one. We had overbought RSI, we had RSI divergence, and the breakout pattern for me counted as 2. So we had that breakout pattern. The big push down, you could have called 1. But that would be a discretionary style trading with divergence. Now let's talk more about how you would trade divergence as a systems-based trader. Well, as I said before, a systems-based trader is going to take a look at every rule he has or she has as set in stone. So I need the market to be at previous resistance. I need the market to show me RSI divergence. To give you a very simple example of this, I'm going to go to the dollar yen chart. Hey guys, before we head over to that dollar yen chart, I want to show you how the Euro New Zealand played out and talk to you a little bit about how I took targets on this trade. I actually did not have my targets set, so that was a trading mistake that I made. I should have had a limit order here because this level in blue is actually where I was interested in taking targets off, and I'll show you why right now. That level in blue happened to be our previous support level out on the higher time frame I was using on this trade, which was the 4-hour chart. So that's where I needed to have a limit order for my targets, but it's already after 5 p.m. on Friday, so obviously I can't take the position off at this point. It will be closed though by market open on Sunday at 5 p.m. So just wanted to give you a heads up on that and tell you how I decided to take targets off on that particular trade. Now let's head over to the dollar yen and I'll see you there. So now what I want to do is take you through how we would use this as a systems-based trader, which is what I see myself as, more of a systems-based trader. The set-in-stone rules you can try to use to create a strategy you can use over and over to take profits out of the market during reversal situations using divergence. So the first thing I'm going to do, I have market replay on, and I'm going to go ahead and push the market forward here. And I want you to tell me if we have divergence right now. Hopefully this isn't too hard to see. We're at the lower end of the RSI, so I'm just going to zoom in on that. But right now, do we have divergence of any kind? No, we have a low on price, right? Low, new lower low on price, low, new lower low on the RSI. We don't have divergence. We're oversold, so we can start looking for potential trades. And before we keep going, my bad, let me actually explain to you the strategy we're going to look for. For a system that I've created, a system or a strategy that's rules-based, we're going to look for RSI divergence. After being oversold, obviously, when we're looking for divergence, we have to see that. We're looking for RSI divergence that ends up having a double bottom with a green candle kicker after the double bottom. So what we would look for, if this market had divergence here, is we would be looking for this bottom. We'd be looking for a double bottom here, and this double bottom would have to be followed by a green candle. I call that double bottom, green candle kicker. So if that's the case, and that's what we're looking for, I want you to try to spot it as I push the market forward. We don't have RSI divergence even yet, so let's make this chart correct and keep moving forward. We have some RSI divergence here. Here's a low. Here's a higher low on RSI. Here's a low, a lower low on price. So right now, we would be looking for a double bottom followed by a green candle to show me this market's going to reverse or likely to reverse. Nothing set in stone. Obviously, there's no 100% strategy, but this is going to give us an advantage over the market, which is what we're looking for. We still don't have a double bottom based on my rules. We didn't get a double bottom at all there based on my rules. So let's push the market forward and see what happens. There we go. Remember our rules from the beginning as well. We have a low followed by 2 green candles now. That means we can start looking at our indicator to see if we have divergence. What I want to do here is look at this low to this low. And what we have is from this low to this low, we actually have some RSI divergence. It's hard to see, and it won't always be it won't always be a lot of divergence if you understand what I'm saying. Sometimes these will be almost equal, but in this case, they're not equal. We have 20.02 in terms of our first low on the RSI, and we have 20.39 on our second low. So therefore, our second low is higher than our first low. That gives me divergence. And in price, from this low to this low, we have a lower low. So now what are we looking for? Since we understand we have divergence on this market, we're going to be looking for this next bottom and a green candle to decide whether or not this is going to be a reversal trade we can take as a rules-based system, as a system-based trader. So let's see what happens with this market. Right there, we have exactly what we're looking for, okay? And the reason is because we have RSI divergence here on our RSI, higher lows, lower lows on price, and at this point, we've pushed up, we've pushed back down, creating our V formation. We've created a double bottom, and the double bottom candle itself is a green hammer candle. This is a great signal. For me personally, would be a great signal to buy. This is not something I'm telling you to go trade. This is an example of a strategy you can create. And right now, if you want to take this and test it in historical data, that would be fine too. But this is just an example strategy of how you would use divergence to create a rules-based strategy for you system traders out there. So let's take a look at what would have happened if we would have actually placed this trade. We had our double bottom, now the market's moving, and now we're starting to push up. We got the reversal we were looking for. So at this point, personally, I would have already hit targets. So this is exactly what we're looking for in terms of being a systems-based trader and using RSI divergence in order to create a system or a rules-based trading strategy. If you like material like this and you'd like to learn more advanced training, and also you need some type of Forex mentor, you're having a very hard time doing it on your own, then we have just had a few recent graduates come out of the EAP Training Program. I'll put some of their testimonials on the screen, some of their comments, and what that means is we have a little bit of space. I keep the amount of members in this program relatively low because I want to be able to talk to them person to person, one-on-one. And with this program, you have something called priority email, which means any questions you have about trading, about the course, about strategies, about creating a trading plan or risk management, any questions you have at all, you can email me and I will personally respond to you within a very short amount of time. The program also comes with a full training course that'll teach you the strategies I use on a daily basis. They're all rules-based. I'm not a discretionary trader by nature. I'm a rules-based, systems-based trader. So that's what you'll be learning in the course. We have a risk management section, discipline section. There's a lot to learn about trading. And if you're struggling with that and you want someone to help guide you down that path of becoming a consistent and profitable trader, then I would be happy to have you aboard in the EAP training program. To get that, click the link in the description to learn more. You don't have to do anything. You don't have to buy it right now. You can learn a little more about it, see if it's right for you. It also comes with a 30-day money-back guarantee. I personally do not want anyone to pay for something that they don't get value out of. So if you don't like the course in 30 days, email us. We'll give you a full refund. It's a win-win situation. And if you're interested in learning more about that win-win, go ahead and take a look by clicking the first link in the description labeled EAP Training Program. If not, that's totally fine too. I understand. Make sure you're subscribed here if you enjoy the free content we do put out. Make sure you click that like button before you go. Comment with future video ideas for me. Follow us over on Instagram for early release videos like this one, and I will talk to you in the next video. See you soon.